Morning everybody, Dwayne Chopper there, DRFX Forex Swing Trading. Today I'm going to take a look at the situation on the Euro Japanese Yen. Going to be looking for swing trading opportunities that might present themselves for us, and hopefully if we see a trading opportunity, it can provide us with the usual 100 to 200 pip targets. So first of all, we can see here on the daily chart that the market has actually been in a very strong uptrend since 2012. Drawing the line across the support points, we can see that this led to the formation of a strong uptrend line. What you'll also notice is that within this uptrend, the market eventually formed this pennant setup, this really large pennant setup at this area here. This would eventually be broken to continue the overall direction of this pair in favor of the euro. As you can see here, the market broke out sharply and provided several hundred pips that could easily have been captured if you were able to get in at the right area, at the right entry points along the way. However, this breakout did not last as long as one would have expected given the size of this pennant. This breakout eventually gave way to a reversal that started the formation of a bear crown setup. This is a common setup that we see across the market that gives us a strong indication that the market is about to change direction. And in this situation here, this is exactly what took place. Here we see that the left tip was followed by the formation of the center tip, and then a break of the inner uptrend line that led to the formation of the right tip. Many traders also recognize this as being the head and shoulders pattern as well, which is another name for this same type of formation that we see here. Having formed this setup, the market then predictably continued this change of direction, as it eventually led to the breakout below the major outer uptrend line. This decline eventually led to the formation of two downtrend lines. The outer downtrend line, formed here by connecting the resistance points, as well as the inner downtrend line. Now this has been a very strong uptrend that led to the breakout below this outer uptrend line. However, you can see that this trend eventually came to an end with the formation of these double bottoms. This was then followed by the breakout above the inner downtrend line, followed by a breakout above the outer downtrend line. After rallying and attempting to continue the breakout above this outer downtrend line, the market eventually lost a bit of momentum and started to move sideways over the last couple of weeks. This sideways pattern, as you will notice across the market, tends to lead to the formation of a consolidation setup, and in this case, this consolidation setup took the form of a small pennant. We also have two uptrend lines that were also formed as well, a small outer uptrend line as well as an inner uptrend line. You'll also notice that this setup is very similar to what is now taking place on the Euro US dollar. Similar pair of double bottoms led to the bullish rally above the inner downtrend line and a movement towards this downtrend line here. As you can see, this formation was very similar to the formation of these two the outer uptrend line as well as the inner uptrend line and the small pennant setup here. However, the difference with these two situations is that while the euro has started to break out bearish to continue the overall bearish direction, the euro yen is still showing bullish signs. So even though we are in a predominantly bearish trend. One, because of the significance, because of the fact that the current and stronger trend is downward, plus the fact that we have broken below this major outer uptrend line, gives the market a significant bearish bias over the medium to long term. However, in the short term, the market, one still has to give priority to the bulls because we're still above this outer downtrend line as well as this uptrend line, this outer uptrend line. And as you'll notice here by zooming in a little closer, the market has actually started to pull back. Alright, connecting this line a little closer to the support area, you can see that the market has started to respond to this, to hitting this outer uptrend line by attempting to pull back inside and rally at least back inside of the pennant, and probably to break out to continue the current uptrend. So we'll have to wait over the next couple of days to see what takes place on this pair, and hopefully the signals that are given can provide us with a significant trading opportunity of between 100 to 200 pips. So in summary, right now the bulls are in control, and it is very likely that the market we'll have to assume and respect the market in terms of the fact that it is predominantly bullish now, despite the fact that the overall predominant signals would indicate that over the long term, the Japanese yen will gain significantly over the euro. So until then, take care.